Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news that Warren Buffett is front and centre today. But first, sales of new single-family homes in January in the US were 5.5% higher than the same month a year ago, but markets had expected an even better result, so there was a sense of disappointment about this. Also a bit disappointing was the latest American consumer confidence reading, by looking like it has topped out. It also did not show a rise in inflation expectations. And in his annual report to shareholders, billionaire and investment icon Warren Buffett reported higher profits even as operating income slipped. He was typically optimistic about the prospects for American businesses generally. However, in advice to savers and investors, he delivered a black eye to the managed funds industry, urging ordinary investors to buy plain vanilla index funds. He highlighted a bet he has on the matter with a large hedge fund manager, which looks like will pay off big time for him. He also had harsh criticisms for the current fad of companies who report earnings stripped of certain elements claimed to be one-offs. And in Sweden, they have abandoned the centre-left government's proposals for a new tax on banks. It was strongly resisted, and fears grew that Swedish jobs would be moved offshore. Instead, they are to move ahead with a plan to force healthy banks to pay for a fund to cover competitors who fail. In Melbourne, there is some serious landlord pain. Landlords have been hit by steep land tax increases from soaring property values, in some cases more than doubling tax bills and making investments uneconomic. In the state, retail tenancy laws prohibit landlords from passing on land taxes to their tenants unless the tenant is a listed company. In New York, the US Treasury 10-year yield is falling and now at 2.32%. There seems to be renewed downward pressure on interest rates. Bond traders are showing more concern about politics, while equities traders like what they see on earnings. We should also note that the risk premium for investment-grade Australasian debt continues to fall as measured by the credit default swap spreads. Bank wholesale debt transaction costs are going down. This mirrors the impressive position New Zealand's sovereign debt holds in the same markets. We are pitched better than most large countries, including the US and Germany and Australia, and in a group with Switzerland, Sweden and Norway. Oil prices are lower and now just under $54 for the US benchmark, while the Brent benchmark is just under $56 a barrel. The gold price is up a little further at $1,257 an ounce. The New Zealand dollar will open the week at 72 US cents. On the cross rates, we're at 93.9 Aussie cents, and against the euro at 68.2 euro cents. The TWI is at 77.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.